Welcome to the Funded Trader. Right now I'd like to address one of the most principal and common questions I get as an option trader is, Wade, I understand the plain vanilla buy low, sell high of stock trading, and I've heard all kinds of different things about options. Mainly, don't do them. They're risky. And I'm here to share with you a comparison between stocks and options so that you can understand the leverage and the power that options provide. So let's get right into it. The first slide that I'm going to share with you addresses this question right here. Are options risky? And I'll be one of the first person as an experienced option trader to say yes, options can be risky if you don't know what you're doing. There's a lot more moving parts when it comes to trading options. If I'm going to go out and earn a living and be a hunter-gatherer, if I go out with a club, I'm kind of limited in what I'm going to go hunter-gatherer. But it's a very simple model. I've got a stick, I'm going to go kill something. That's stock trading. Buy low, sell high, might even short a stock. But I just don't have that much leverage in what I'm doing. But a gun, on the other hand, well, you've got to have some moving parts. You have to have gunpowder, you got to have bullets. But when you get a gun and you use it properly, it opens up a whole world of opportunities. And as we get into our options trading, my objective here at the Funded Trader is to share with you the ins and outs of micro, short-term option trading. Because I recognize as a professional instructor that there's all kinds of information and more common misinformation out there in the marketplace, and I want to share with you my experience, the questions that I've had and those that students around me have had, so that you can learn from somebody else's experience. And these moving parts, as we get deeper into fundedtrader.com, as we get into additional coaching and classes, I'll break into detail what it means for an option to expire, the spread between the bid and the ask, what does delta mean, along with other Greeks in our option chains, why is open interest important, time value and intrinsic value, and strike prices and implied volatility, and right versus obligation, calls and puts, exercise your options, and how the market maker affects your trading. All of these things build a more complex weapon that, when it's used properly, gives you leverage and opportunity that could never be possible in stock trading. And so we're just going to peel that back and systematically go through that process. So let's talk about the reasons we might be interested in trading options. It comes down to advantages and limitations. The advantages are very compelling. Low cost, high rates of return, multiple directions. I can trade different option strategies, bullish, bearish, neutral. I can also apply them to different stock trades that I'm doing and increase the cash flow on my portfolio that I'm sitting on. Many people don't even know that you can rent out stocks that you own by using an option strategy called a covered call. It comes down to this word right here at the bottom. It's all about leverage. And leverage is what allows us to swim in the deep end of the pool. It allows us to trade stocks that might be out of our price range so that we can go trade the higher volatility, higher volume companies to get a bigger bang for our buck. But if you're going to do that, you also need to understand the limitations that are inherent in this. Number one, it can be a little overwhelming. They can be difficult to understand. And if you don't manage your risk properly, they can hurt you in a hurry. That's how it is with leverage. If I do it properly, congratulations. But if it's not managed and you don't understand the rules of the game you're in, it's very difficult to win that game. So our goal here is to trade them properly and understand and apply as many of these rules and principles as we possibly can. But before we put in that effort to learn how to trade options and why we should do it, let's build another compelling reason and do a comparison between stocks and options. For me, it comes down to rate of return. And on this slide right here, I'd like to share with you an illustration. We're going to do apples to apples so that you can compare this. So I have a stock. It's trading at $47 a share. And I look at the company and I'm bullish on it, meaning that I anticipate it going up. And if I'm going to do this trade, instead of buying a stock on a per share basis, I'm going to buy to open the next month $45 call. And that's going to, in our example, cost us $3. Now the way this is derived is the stock is trading at 47, and we subtract right here the intrinsic value of 45, or the stock is trading at 47. I have the right to buy it at 45, and the difference between 45 and 47 is $2, giving me $2 of intrinsic value, plus a $1 in time value. Intrinsic value and time value equal premium. So I have a total investment of $3 per share. So if I have one contract, that's $300. So I have $3 per share invested in this trade. Now, as we anticipated, the stock was bullish, and it went up, and it's actually trading at $55 a share, and we have the right to buy it at 45. So the difference between 55 and 45 is $10. Now, in this example, let's just say it's right at expiration, so I have 0 time value left. So let's calculate our rate of return. A simple calculation, cash in divided by cash out equals our rate of return. So I have $10 of intrinsic value, but it did cost me $3 to get into this trade, so we need to subtract that from our cash into our pocket at the end of the trade, which leaves us $7. So a cash in of $7 divided by our initial cash out of pocket of $3 provides a 233% rate of return. Now I'll give you a minute. But is anybody's bank offering a 233% rate of return, or a mutual fund? It just doesn't exist. And you are not likely to have a rate of return like that in a stock trade. But in an option trade, and this is for illustration purposes, you can see that I can control a more expensive stock for less money. And it provides a increased rate of return. But we don't know how good something is until we compare it to something else. So let's take a look at our next slide and compare that same dollar move, except this time we do it plain vanilla and we buy the stock. Again, the stock is trading at $47 a share. We're bullish on it, so we buy the stock. Stock goes up, we sell it at $55 a share. Buy low, sell high. Now, $55 minus our initial investment of $47 gives us $8 into our pocket. So our cash in of $8 divided by our cash out of $47 gives us a 17% rate of return. Again, a very solid rate of return, but we had to have more money in our pocket. And for a lot of people, there's no need, nor do they want to, tie up that much money for a rate of return when they can get a much bigger rate of return using an option. So in conclusion, without a doubt, trading involves risk. It involves an investment in your time, money, and personal responsibility. And we can stop right here if you're not willing to make that investment in your time, in your money, in your personal responsibility. See, most people believe that somebody else should be taking care of it for them. They're going to give it to the professionals, a mutual fund manager. They're going to dutifully contribute to their 401k. And they stand on the sidelines, and when things are going up, they're happy. But when they're going down, they don't know why, they don't know how, and they just want to blame somebody else. You can do one of two things. You can either make a change, or you can get mad at other people, but you can't do both. If you'll take responsibility, make the investment in yourself. Because if you're going to be successful in anything, it's important to know the rules and have a system and a strategy to achieve that. And in the stock market, I have found it more compelling and more beneficial to trade options instead of just stock trading. So as we move forward in this, review this. Motivate yourself to understand that options are a powerful, lower risk way to trade if they're traded properly, and we'll learn the ins and the outs. But if you don't have the motivation and you don't understand why you're putting in the sweat equity to learn it, you'll lose steam. So join us on this journey to trading options better, and check back for additional training here at Funded Trader.